Let's look at 4 ways to avoid losing money with your investments. Number 4, don't invest all your money in one asset. When it comes to investing, the old adage, "don't put all your eggs in one basket," rings particularly true. By spreading your money across a number of different investments, you can minimize your risk and maximize your potential for earning a return. For example, if you invest all your money in a single stock and that stock takes a nosedive, you could lose everything. However, if you have a diversified portfolio that includes a mix of stocks, bonds, and cash, you'll be much better positioned to weather any market volatility. So if you're looking to safeguard your investments, remember to diversify. Number 3, time in the market is better than timing the market. Anyone who has ever watched the stock market knows that it is unpredictable. Even professional investors cannot always accurately predict which way the market will go. As a result, trying to time the market is often a fruitless endeavor. Individuals who try to buy low and sell high often end up selling when the market is low and buying when the market is high. This can lead to big losses, particularly if they are investing for the long term. Time in the market is more important than timing the market. By investing regularly, individuals are more likely to ride out the ups and downs of the market and come out ahead in the long run. So if you're looking to avoid losing money with your investments, don't try to time the market. Instead, focus on investing for the long term. Number 2, don't panic sell. Anyone who has been following the stock market over the past few years knows that there have been some ups and downs. In fact, it seems like there is a new crisis every other week. As a result, it can be tempting to sell everything and get out of the market when things start to go downhill. However, this is often a mistake. When you panic sell, you typically sell at a loss, which can compound your losses in the long run. Instead, it's important to have a long-term perspective and ride out the bumps in the market. While it may be scary in the short term, history has shown that the stock market eventually recovers from downturns. So instead of panicking, sit tight and wait for the market to come back around. Before I move on to number 1, make sure you subscribe and click the bell. That way you'll be the first to see my next money-making video. Number 1, don't chase the money. A lot of investors chase the money, buying stocks that have skyrocketed in value. They see a company making 12% gains and they want to get in on the action, hoping to make a quick profit. However, this is not a wise investment strategy. Just because a stock has gone up in value doesn't mean it will continue to do so. In fact, chasing the money can often lead to losses. It's important to remember that stock prices can be volatile, and what goes up may not always stay up. If you want to avoid losing money with your investments, it's best not to chase the money. Instead, focus on buying quality stocks that are more likely to provide long-term growth. Click the video on the screen to see another money-making video.